Hey everybody, what's up? What's up? Midterm elections. We had the elections yesterday, so let's go over it. Let's talk about it. Actually, it played out pretty much exactly the way the polls had predicted. The Democrats now have control of the House of Representatives, and the Republicans still have control over the Senate, and they picked up a couple of more seats there, so they actually padded their majority. I think in the House, it is something like 221 to 193 or something like that. Don't quote me on the numbers, but the House is definitely controlled by the Democrats. Now, what does this mean? It looks like there's been a lot of now talk and a lot of speculation about what the Democrats are going to do. I want to talk from a standpoint of economics. But first, let me just discuss the prospect which had been raised going into the election of a potential impeachment of President Trump. I do not think that is going to happen. The Democrats in the House can try that, but they do not have the Senate on board, so I think that's going to fall flat. That's going to go nowhere. As far as, let's talk a little bit about the economic consequences. There was a feeling that if the Democrats won, that they would enact policy that could potentially sink the economy. Those policies being maybe increased taxes, cutting spending. You know, the Democrats like to portray themselves as the mature party, and there's been a lot of talk about the deficit rising back up again. I do not see that happening either. As a matter of fact, one of the principal platforms that the Democrats ran on, healthcare, of course, was one, but also a big infrastructure spending bill that, you know, that's been on their agenda for a long time. And Trump has been trying to get an infrastructure spending bill passed in the prior Congress, but it went nowhere. So there is actually a possibility now that we will get a very significant infrastructure spending bill passed now that the Democrats are in control of the House. As far as raising taxes, very likely that Trump would veto something like that simply because he has the ability to veto, and the Democrats in the House of Representatives do not have enough of a majority to override his veto. So I do not see new taxes as a consequence of the election. So pretty much status quo with the addition, not status quo, I should say. It should be an addition to what is already shaping up to be another record spending year. I mean, if you look at the fiscal flows right now, and we are, just the 7th day into November. I have the data through November 5th. Of course, I get that every single day from the daily Treasury statement. My data and my analysis is as close to real time. Everybody else is looking at stuff, you know, a month ago or last quarter. My stuff is real time. It's every single day. And we are significantly, in terms of spending, government spending, we are significantly above where we were at the same time last year. And last year was a record. So we are adding to that. There has been an acceleration in the fiscal pump that is supporting and indeed pushing the economy. And that is significant because it means stock market's going to go higher. It means economic growth is going to stay at least at the level that it is right now. We're talking about, what, 3.5%, probably rise above 4%. You're going to have continued rate hikes by the Federal Reserve, and that's going to go on for a while. You have other things that are going to enter into the picture, too, at the end of this year that have nothing to do with the USA, but you have the ECB now, which is going to end asset purchases in December. That is very bullish. Of course, the whole act or the whole asset purchase thing has been stripping out high-quality assets from the economy in Europe. It's been sucking out income. So when they stop doing that, that's going to be a positive. Eventually in 2019, maybe around the summer of 2019, the ECB will start to raise rates. We hear Japan talking about normalizing monetary policy, quote unquote. That also means potentially the end of asset purchases. So we're in the very, very early stages still. The Fed has been doing all the heavy lifting on this for a long time, for the last 3 years. You had all these other central banks, the ECB, the Bank of Japan, and until recently, Bank of England, Bank of Canada. You still have the Australian central bank. You still have the New Zealand central bank. You have all these other central banks still with their deflationary policies of very, very low interest rates or asset purchases. We're still in the very early stages of the turnaround into the inflation cycle. So I'm not surprised that you see the stock market up 350 points today. Stock market is headed for a new high. I am not surprised, but I find it opportunistic that bonds are rallying today. Why they are rallying? Most likely on the belief by the zombie cohort that this somehow the election is going to translate into a slower growth economy. That's not going to happen. At least I don't see any policies out there right now that would even suggest that it's going to happen. And again, I see the data every single day, so I'll know, and my subscribers will know before anybody. So you have all that going on. Everything looks positive. Sent out a lot of emails today on the oil market situation. Of course, I called the top back in early October. It was October 4th when I said oil has peaked and it was at $76 a barrel. What am I doing down here? If you want to find out, go to my website, pitbulleconomics.com, and sign up for a 30-day free trial of MMT Trader or a 30-day free trial of Zombie Trading. Zombie Trading is my daily Forex signal service. We front run the zombies, take their money, and get out before they die. So it looks pretty positive on this election. Yeah, there might be some annoying things happening, like an expansion of the investigation into Trump's dealings, the continuation of this ridiculous Russia probe. All this is nonsense, but in terms of the economic landscape, the way it looks, the way it falls out now as a result of the election, I don't see anything right now or even things proposed that are going to sink the economic expansion. And in fact, I see the whole thing even accelerating. If they come out with policies saying, hey, we're going to balance the budget, or we're going to reduce the deficit, we're going to raise taxes, we're going to cut spending, and if those things are passed, then yeah, I'll tell you, it's over. You got to get out. You got to move to cash, whatever. But that's not even on the table. That's not even in the discussion right now. So I do not see that happening. So the inflation theme, in its very, very early stages. Rate hikes are going to continue. You got to sell every rally in the bond market. Rates are going up. Economic expansion is going to continue. As a matter of fact, it's going to accelerate with the amount of spending going on right now. You're going to get an infrastructure deal, $1 trillion infrastructure deal. A lot of positive things happening here. A lot of positive things. You want to be in certain sectors of the market, certain investments. I talk about that on a daily basis, many times a day, as a matter of fact, in the emails that I send out. All right, so that's my rundown on the election. Played out exactly this time. It played out exactly as the pollsters had it, and it all looks good. All right, everybody, have a good one. Bye-bye.